Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. If you're just starting out in the area of financial management, maybe you're having some curiosity provoked by listening to the show, you're a new entrepreneur, or you're just someone who really hasn't received any formal financial education, but it seems like there's so much advice out there that's conflicting and confusing when it comes to what to do with your money. It just becomes so overwhelming that we do nothing. And then we really don't know what to do or how to strategize our money, and we could be missing out on opportunities. I wanted to go back to basics with today's guest, Marc Russell, better known as BetterWallet on Instagram and social media platforms. And Marc has such a really cool story. I wanted to share this with you as well. I started following Marc right around when the pandemic was going on, and I started following a lot more, financial coaches and financial advisors on TikTok and on Instagram, seeing what they were putting out for education. And he's one of my favorites for a reason because he really breaks down really complex concepts into something that's actionable really quick. And he gives you just the bite-sized pieces that you need one at a time without making it too complicated or talking over your head. So a little bit about Marc. Marc is a foster child turned full-time financial educator. After 13 years in foster care, Marc was adopted by a low-income family who prioritized education. He self-funded his college education and then climbed the ranks at some of the largest financial institutions in the world. He became a licensed stockbroker and financial advisor while also receiving multiple investment-focused certifications. While excelling in the Wall Street career he had, he noticed that his finances needed some serious attention. He was still living paycheck to paycheck with $80,000 of debt. He used the same financial tips he was teaching his clients to then remodel his own finances and become debt-free. He then grew a thriving business that teaches new investors how to strategically manage their money the same way he learned. Now he is a full-time entrepreneur and founder of BetterWallet, and he teaches families all around the world how to make money work for them through practical investing. He's also the co-founder of the Finance Creators Mastermind, which teaches business owners how to structure their practices to one day retire from the 9-to-5 jobs. He's been nominated for many personal finance awards, including the Plutus Award for Best Debt-Free Content. His teachings have also been featured on many major investing and business platforms, including Time Magazine, Business Insider, Bankrate, Vice, Harvard Business Review, CNBC, and USA Today. I'm so excited to welcome Marc to the show and to share his story with you, along with his perspective on money management and investing overall. And he even includes, towards the end of the episode, a lot more tips that you can take away and use today to help build your wealth right now. Hey, Marc, so happy to have you on Keep What You Earn today. How are you?
Good. How's it going?
Good. Marc, can you just say hi to everyone, introduce yourself and what you do?
Yeah, definitely. So Marc Russell, I am the founder and owner of BetterWallet. BetterWallet is focused on helping people streamline their finances so they can invest more for themselves and for their families to build generational wealth.
An amazing mission that we all have. I mean, who doesn't want to build generational wealth for their family
Mhm.
and achieve all of this? Now, these are big goals though. A lot of people are overwhelmed by the idea of like generational wealth. Like I can't even pay my rent. I'm checking my bank account before I go to the grocery store. Like how am I in a position to build generational wealth? And I want people to hear your story and to have you kind of share a little bit about your background, your story, and we're going to unpack that a little bit before we go into a lot of the investing tactics.
Definitely. I'm looking forward to that. So my story is a crazy one. I was born in Philadelphia, Kensington, Philadelphia, to be more specific. And I mentioned that because Kensington is a really underdeveloped area of Philadelphia where you still have victims of drug abuse all around. Unfortunately, both my parents were victims of drug abuse, and that led me to not only be a preemie baby, but also I was put into foster care as soon as I was born. So from foster care, I bounced around to a lot of different homes, a lot of group homes, a lot of just single family homes. And then finally I landed in a small town in Pennsylvania called Mount Union. at that time, that was the first time I had a mom and a dad that actually cared about my well being and didn't just take me on because they were receiving money for being foster parents. And I also had like older sisters, which was great. And during that time, they really prioritized education. So they wanted me to do really well in school because they couldn't go off to college because both of them lost their parents at a really young age and they had to take care of their younger siblings. So they wanted me to go off to college, and also my siblings. So eventually I was adopted at 13, and I was on this mission to eventually go to this thing called college that I had no clue about. No one from my high school went off to college. And, I had some teachers that would take me underneath their wing and say, hey, like you have the opportunity to do better than everyone else around you. And they said, hey, like you don't have to be like the guys on the corner, guys and gals on the corner who are, I'll call them entrepreneurs, but they weren't paying taxes, which I think you'd appreciate. And those were
Yeah.
my mentors growing up, until I met some of my teachers in high school who said, hey, like, that's not your future. Like, you are a bright kid, you're motivated, you're determined. We want you to go off to college. So eventually, not knowing how the hell I was going to pay for it, I found myself at the Pennsylvania State University with no clue how I was going to pay for school. And that's truly where the journey of BetterWallet started.
Amazing. What did you study at Penn State?
Economics. So I went in
Okay.
initially for engineering, realized that that wasn't my thing. And then from there, I made my way into economics. The backstory of that is I went from engineering to management, and then I didn't have the GPA to stay in management. Longer story, but the short of it is that my freshman year was a wild one. Like there's a lot that you have to learn the first year of college, and I didn't have any money to just get tutoring or have a laptop or any of these things that I consider to be luxuries, or pay for, $1,000 for books. Where am I going to get this money from? Right. So like I would have to borrow books, which when you're studying for exams, you can't just borrow books from people because they needed to study. So my freshman year was a wild one, just trying to figure that out. Every day I was at the student aid office begging for money and trying to find a way to do this thing called graduate in 4 years. So it was quite the journey of trying to just figure it out by myself.
Now, when you chose economics, right? Was that a mindful choice in terms of I want to learn about this because I want to do this for a career, or was it a little bit more of a necessity thing? Because some people pick their major just based on, oh, well, that had an opening, And I wanted to know, like, how intentional was that selection, and how it kind of set you on a path.
Not intentional at all. From management, business management, I wanted to stay within the business school, the Smill College of Business, and I thought to myself, okay, what major can I get into that has the lowest GPA requirement? This is literally how I thought about it. Has the lowest
Yeah.
GPA requirement that will allow me to get into finance one day, where I know they make a lot of money.
Okay.
Because I didn't like, I think the GPA requirement for finance was like a 3.5. And I'm like, that's not me. Management was like 3.0. I was like, nope, not me. I was like, give me like the above 2.0 range. Like I can do that. And economics, their range was, I think you had to have like a 2.1, and I had like a 2.3 at the time. And I was like, cool, I could do that. So I went my way into economics, and I found that I loved it. I loved the strategy behind it, and I was in college in 2008, so I was able to then understand like what was happening from like a real estate standpoint from the economics background, and just real estate just going to hell and back in '08 and '09. And then I just had like this strong fascination for like what was happening on Wall Street, and how so much money and property was ripped from so many Americans across the country, and it sent tidal waves to other countries across the world. And I was just so fascinated on like what led to that. And when you start learning about like just corporate greed and like these package securities, and the fact that these companies and their CEOs are getting paid money to unravel the securities to figure out what the hell happened, and just all that stuff was just like really interesting as like a kid that came from a small town that didn't know anything about New York or Wall Street or how finance works at all. So that was like a part of my journey, is trying to figure all that stuff out. And figure out how I could be the solution to that issue.
I love it. And there's a piece of your story I want to unpack as well, which is while you were going through this evolution, right? You were in the foster care system, you had a family that supported you. I think we can talk about that a bit
Yeah.
into college and graduating. Like, how much support did you receive from your family? Not financial. I mean, like in going through that process, but then also, in your career. Like,
Yeah,
talk about your family's role and your support structure as you were kind of figuring all of this out. Cause you were saying, like, you didn't have the same resources as a lot of people who are around you. So what was your support system like?
definitely. And I would be amiss if I didn't bring this part of my story up. At the end of my freshman year, the person who did truly support me, my adoptive father, who was like my best friend, he passed away after my freshman year in college, which
Wow.
if we had any financial support, it was coming from him. Emotional support was coming from him. My mom is not that way. I'll put it that way. But that was what he was all about. And to lose him in the way that he went out, basically just cardiac arrest in front of me, and my mom was in another room, it was traumatizing. And it turned me from a boy to a man really, really quickly, like literally overnight. So when he passed away, I had no financial support for sure from any family members. Not only did they not have it, but they didn't want to give it. Also, just emotional support. They were constantly telling me, oh, drop out of school, take care of the family. You're the man of the family. This is what you should do. You're not going to graduate in 4 years anyhow. Like, you're not going to get a great job. You end up working for the man. Like, why don't you just work for this warehouse that is in our town? And when I was telling them, hey, like, this is what I wanted to do, I want to help people invest. I want to help people not have to deal with what's happening right now in the middle of this great recession. They didn't believe that I could ever do that. My mom would always say, like, oh, you'll never achieve like what you truly want to do. Like, here's this world that I believe you are able to survive in, and anything outside of that, I don't think you're going to do well. And I would constantly hear that, and it was motivation for me to go and be the person that she thought that I couldn't actually be. And that was like a big driving force behind how I was able to graduate and then eventually get into corporate America.
What advice do you have for those listening who maybe are trying to take some type of big leap? Maybe it's the first one to go to college. Maybe it's the first one to become an entrepreneur or to break some type of norm or status quo in their family or in their environment. What is your advice to them on if they are struggling with finding support around them? Like my family says I can't do it or my teachers say I can't do it. How did you break through that?
Yeah, I realized that a lot of times when people tell you can't do something, is because they weren't able to do it themselves. They would always say, hey, like, you can't do this. I mean, I've heard it time after time again. You can't build a business. Like, most businesses fail within the first year and all this other stuff. Like, first of all, your older kids don't get adopted. I've heard all that and all the statistics. What I would say is ignore the noise and go after what your goals are. If you have a goal of being, I know we were talking about being a pilot, like,
Yeah, yeah, yeah.
that's your goal, then go for it. And there's going to be a lot of people who won't believe in you. You want to gravitate towards the people that truly believe in your mission and your goals, and you go like you go fast forward into whatever you want, and make sure that your goals are somewhere that's visible. For me, when I was going through my debt free journey, or when I wanted to land my first job, or I wanted to graduate from school, I had on my whiteboard whatever that goal was. So when I woke up in the morning, I would like get up, and that would be the first thing I'll see in the morning, that and a picture of my dad. And that was all the motivation I need to go towards whatever that goal might have been.
I love that. It's so true. So let's talk about your journey for a minute, your debt free journey.
Mhm.
From going from a place of curiosity to the place of service that you're in now,
Mhm.
there's a huge journey there. So I want to talk about how did you, number one, go through that debt free journey? If you can just kind of cover that for us, but then also how you got into educating others as well and what motivated that.
Definitely. So there's two sides of that story. It was the world of being in corporate America, and then the world of just being really broke after the 9 to 5, right? So in corporate America, I was able to join the Vanguard Group as my first employer, which was great. I didn't know what they did when I got hired. I was like, oh, like, they sell securities. That's great. Like, I didn't know how big of a company it truly was, or how big it was going to grow to. So during that time, I became a licensed stockbroker, and fortunately, I was able to talk to a lot of people over the phone about their finances. A lot of retirees, a lot of multimillionaires. And just as a curious kid, I'd ask questions on like, how did you get there? Like, how do you have this $1 million portfolio? How did you make $10,000 passively over the last week for some of them? And they would sit down because, retirees have all the time in the world. They'll sit down and say, okay, well, here's how I went about doing it. I was able to budget my money. I was able to pay off all my debt. Any money that I made extra, right? So you're kind of trying to widen the gap between how much money you're making and how much money you're spending. They said, hey, like I went and I invested. Sure, I had some fun here and there, but like I made sure that I invested that money until I got to the point where I made, six figures, or I had six figures invested. Then, 500,000. Then I got to the point where I had $1 million. And now I'm just comfortably living, retired. I retired early, and that was the formula. So for me, I thought to myself, wow, like I didn't even start step number one yet. like, though
Yeah.
I'm learning all this stuff, I'm a licensed stockbroker. I'm learning, about everything related to just being that person, being this, executive. My finances weren't doing so great. I was living paycheck to paycheck. I had $80,000 of debt, and I was struggling. I was literally just struggling. I remember, I never even talk about the story ever, but when I got my first couch for my apartment, I had to write the guy a check. I got it from Craigslist. I had to write the guy a check, and I told him, don't cash a check for 2 weeks. I'm not going to have any money in there whatsoever. That's how broke I was. And it was a struggle, but that was the beginning of my journey where I realized I didn't have any money. I was living paycheck to paycheck. I would sometimes take PTO so I didn't have to pay to commute to work because I didn't have the money. And I said, I can't do this forever. Like my dad did it when he was alive and he lived paycheck to paycheck. My mom did it. My sisters all have done it. Like a family member has done it. And I said, I want to be different. Again, like I want to challenge the status quo, and I just want to be different. And I remember just Googling and saying, okay, like how do you pay off debt? And you always get the responses of like, it's impossible, or like, then you get like the Dave Ramsey's, and then they would say like, there was one
Mm.
up there that said, you just need to budget. You need to know where your money's going. I'm like, okay, like I could do that. So that started the journey of tracking my money and building a money plan. The first budget I ever did was horrible. I was literally just budgeting for my bills, where I would say, okay, here's 5 bills I need to pay, paid them, and then I'd find myself still with overdraft fees. And I'm like, why is this happening? And then after a year of doing that and having no overdraft fees, I'm like, okay, like something needs to change. What's going on? Then I started budgeting for my variable expenses. I went to a party school. Penn State is very much a party school. It was very normal for me to go out Thursday, Friday, Saturday, and sometimes Sunday. And I found myself doing that even after college. I was going and buying new clothes. I would, my friends would come into Philadelphia and say, oh, well, like, we need to go out. We need to party to celebrate whatever the hell we're celebrating at the time. And because I was the kid that made it, I felt like I had to pay for all that. And that put me deeper and deeper into a whole credit card debt. And that was like my biggest challenge. So once I started budgeting the right way, I realized that a lot of the money that I was spending, or a lot of money that I thought I didn't have, I was just spending it in the wrong area. So then I try to find ways to reallocate those dollars to things that made sense for my long-term goal. And that's really truly where it started. That part of the financial journey started there. So then you naturally start to build a vendetta against every single expense that you have. So for me, it was, I'm going to stop going out as much. Notice I said as much. 'Cause I was still,
As much, yeah.
yeah. I said, okay, well, I'm going to take care of this credit card debt. I'm going to take care of my card note. I had a $20,000 car, and my card note was like $350, and said, hey, I'm going to take care of that. And as I start taking care of those expenses, then I say, okay, well, what are my other big expenses? And one was rent, like living expenses, right? And I don't advise this, but one thing that I did, I was like, okay, well, I'm paying $1,500 for rent. How can I decrease this expense? And I went back to the handy dandy Craigslist, and I looked for apartments that were extremely cheap. Again, I would not advise this. And I found one that was $600 a month. And I was like, okay, it's like in a really nice neighborhood and have like red brick walls. Like, okay, I think I can live there. So the next week I went and I applied and ended up getting the apartment. And I thought it was all gray and dandy. When I tell you that it was like Jumanji, like there were so many mice and other critters that I do not want to mention on the podcast, but they were not good ones.
Mm.
I did that for what year was that? 2017. That like when I tell you I had a vendetta against my debt, I was doing whatever I could to decrease my expenses.
You took critters as roommates to
Decrease my living expenses so I could have
Wow.
debt, right? So like I was saving like $900 a month, right? So like you take that and you apply it to credit card debt, like you're gonna be credit card debt free pretty quickly. You might be living
Mhm.
with a mouse, like a couple mice underneath your feet, but again, I don't advise this. I was a dumb at the time, but that's what I did. Find more practical ways of decreasing your expenses.
I think there's a message in there though, which is the like, do what is necessary.
Yeah,
Like, do what is necessary. Throw your ego aside. Throw some type of weird fabricated standard of living we've all been told we have to have. Like, stop putting on airs, stop worrying about your image, and just do what is necessary. And
downgrade.
I think that's what you did. I think that's the message to take away. Not like you have to be roommates with Mickey and Minnie over here. I think it's just you have to do what is needed.
You really do. And like being able to go and downgrade my life and use the money that I was making from my corporate job towards one of my goals being paying off debt, that's when I truly knew that I was focused on that goal and I was hell bent on becoming debt free. So eventually, credit card debt, which was my biggest struggle, eventually I didn't have any more credit card debt. I paid off my car. All right. So, like, no credit card debt was probably like $300 a month. You add in the fact that I didn't have to pay for my car anymore. So that was 350, right? So, like, you start adding that up and it become bigger and bigger debt payments that you can make towards student loans, which was my last debt. So then I started paying off my student loans. And then fortunately, unfortunately, COVID happened. Obviously we're all kind of quarantining, at least in the Northeast. And from there, I was that was a punch to the south.
Well, also to be fair, the Northeast do not have the type of weather to be anything but indoors during most of COVID, so it's fair.
So yeah, I mean, eventually, I didn't really have the expenses of going out to eat or spending time with friends or what have you. So I was putting all that money towards that. At the same time, I was online on Instagram and I was teaching people how I was going about doing it. I was documenting
Right.
the story, and I was adding in what I learned from being at these Wall Street firms. Hey, what is an ETF? What's a mutual fund? What's a stock? What's a bond? Like, what's like an appropriate investment strategy? All that stuff I was able to incorporate in, and the School of Hard Knocks, kind of wrap that in there. I was able to build a really nice platform, which has luckily grown to something that I could have never imagined years ago.
Yeah. And that's how I found you. I was like, "Oh yeah, it's BetterWallet." I actually didn't know what your real name was for a while. I just knew BetterWallet. Just like I know Cindy as Zero Base Budget or I know Janice as Yo Quiero Dinero. I'm like I just started to get to know like everyone's handles and I was like, "Oh yeah, I know BetterWallet. What's his name?"
For the longest time, so like the OG followers, they were always like remind
Yeah.
me of this. I didn't even show my face, and I didn't
Yeah.
show my name until like 10,000 followers, and I felt like my followers needed to see who I was and what I was all about. So I started sharing my story more, sharing what I look like and all that. And now I have to because of Reels, because Mr.
Yes.
Zuckerberg requires us to do that.
Yes.
But I was very much in the background, and I wanted Better Wallet just to be a platform where I'm teaching people how to invest, how to manage their money, and I wanted zero accolades from it. So that's truly the journey, and it has blown up like crazy since then.
I want to talk about what you teach. I want to teach some stuff to folks here because I love how you break things down very simply. And I also want to just like acknowledge that I love that you leaned into teaching others.
Mhm.
And because You could easily say, "Who the hell am I to teach this stuff? I had a whatever GPA, I studied this, like, what do I know about it?" You saw an opportunity here to say, "I know something these people need. I
Mhm,
can explain this because I learned it the same way." And you are almost serving you're almost stepping into the gap that your dad left,
mhm.
because it's like that financial support that you guys need that I didn't always have. I can be that person for you. Do you ever feel like that's kind of a big motivator for you, is like showing up as the person they may not have in their lives inherently that can help them through that?
100%. Yeah. A big reason on why I do what I do is when I was in corporate America, I found myself making millionaires multimillionaires. And
Mhm.
for a little bit of time, I thought that was the coolest thing ever because I've never met a millionaire before until then. Then I realized that, what am I doing to help people that are struggling with their finances that came from where I came from, that look like how I look? How am I helping them boost their finances? How am I helping them invest their first $1,000 or 10,000 or 100,000? What am I? And I realized that with my background, I was a licensed financial advisor at the time and a licensed stockbroker. What am I doing to help them? And the position I was in, I was like, I need to do something. And that's truly where, Better Wallet came from, is, me being someone that traditionally you don't necessarily see, talking about topics that they haven't heard about before. And I'm able to break it down in a way to make them like help them to understand it, because I used to be in their shoes. I have family members that are in their shoes where I have to every day break it down for them. Here's what ETF, here's mutual fund is. And if I start
Mhm.
talking about like, hey, like a mutual fund is a way to diversify your portfolio,
Oh, yeah.
like people are going to be turned off to that. Instead, I bring up really fun examples of like a bouquet of flowers or things that you might be able to relate to, that I can connect the dots between mutual funds and ETFs, for example. So yeah, I would definitely say it comes from that. And I would also say my dad was very much a type of guy that would take his shirt off for anyone in the middle of a rainstorm. Like it was very normal. Again, I'll start by saying we didn't have any money. We didn't have a gigantic house. But if people were struggling financially, it was nothing for my dad to say, hey, like, here's a room. You can stay here.
I love that.
I call him my Uncle Luke. My Uncle Luke, he did 10 years in jail for a crime that he still believes he didn't do. Longer story. But we brought him in, and he and his daughter lived with us for years. And that was just like a normal, like, of course, type of thing to do. My dad would host, like, he would have like cookouts every Sunday. Again, we didn't have any money. We'd have cookouts for the people around town that couldn't, like, they didn't have money to eat. And that was like a big thing. So, for me teaching, it was just natural. It's me living on in my head, my dad's legacy, because that's what he would want me to do.
I love that.
Take what you may have and apply it and help out the masses for them. And here's what is even better and what I love: when I go and I teach, and then those folks go and they teach others. Like I had a student the other day came to me and said, hey, like I learned a lot from you over the last year. During Thanksgiving, I sat my family down. They didn't like it, but I sat them down and we started talking about Roth IRAs. And I was able to break down how you can go about funding a Roth IRA over a course of a year. I'm like, man, I was like, Alejandro, that's like really powerful. Like, because
Yeah.
then they can go off and teach others. So I get really excited about that kind of stuff.
I love that.
But it all comes from me saying, okay, well, I need to be that person and I need to insert myself in there and I need to tell my story, because then people can relate, they can hear what I'm saying, and it can truly change the financial trajectory of their entire life.
I love it, and I was gonna ask you too, like, what are some of your favorite student success stories?
Mhm.
I love that you used that as when they teach others is when you feel the most successful, because that's the impact, that's the ripple effect that you want. What are some of the results that your students have gotten, or some of their goals when they come to you? Because I want people to understand what it is you do, you offer, and what results you help them get.
Yeah, definitely. So, like, where I differ from a lot of other folks out there is that I appreciate getting into the trenches with people, where they come to me and they say, I am struggling to pay rent. I'm struggling to budget my money. Whatever it might be. And we sit down and we figure out exactly what that might be. I help them build a financial foundation because my students know this, they probably recite it at this point. Your foundation is the most important part of your financial journey. So we start with that because if you don't have a strong foundation and you try to put a house on it, what happens? The house falls. Like, I don't care how big the house is, it's going to fall. So we start there, and then from there we build the house, which is a lot of investing and building assets, and then we put a roof on top of it, which you would appreciate, like tax management, right? So
Mhm.
like, how can we make sure now that you have the house that it's protected? So we talk through all that stuff, and I think that's where I differentiate myself from other course creators or other people online, is that I love just jumping into the trenches. But specifically, what they come to me for is that financial help. And then also, they come to me, in the world of the internet, there's a lot of people that invest, but they invest the wrong way. They
Mhm.
basically are gambling. And, I like when people are putting money into the market, but there's a specific way of going about doing it. In 2020, a lot of people started investing into Robinhoods or whatever it might be, whatever the platforms might be, and they jumped into individual stocks. They'll go and buy the hottest stock that they see online that Joe Schmo influencer told them to jump into.
GameStop.
It's funny because like Bed Bath and Beyond is now popping up
Mhm.
and people are jumping in. I'm like, you're jumping in at the high, you're going to lose a lot of money. But a lot of times like that, the people that come to me, they'll say, hey, like I lost a lot of money in the market. I want to find a way that I can invest the right way so I can actually build true generational wealth for me and for my family. So we
Mhm.
sit down, we unravel whatever mess they got into. And then from there, we restructure the portfolio to meet their specific goals. With my background as a licensed financial advisor, I was doing that every single day for multimillionaires. So why couldn't I just do that for someone else that is trying to start off their portfolio? So that's been a lot of fun over the last year, just unraveling. It kind of feels like I came into the financial world to do, like where we started talking about like Wall Street and like the packaged securities, right? So you're kind of like unraveling those securities and then trying to find a way to reposition it into something that makes a little bit more sense for their portfolio, for their goals.
Mhm.
So that's been a lot of fun doing that with my clients.
I love it. And you mentioned like investing the wrong way versus the right way. What do you recommend? Now, obviously, you guys know I disclaim the crap out of these episodes with like financial advice, like not individual advice, whatever. Like safely, though, what are some of the key themes or key approaches that you tend to encourage in your programs? Like investing the quote unquote right way. What does that mean to you?
Yeah. I mean, it does truly come down. I know I started off by saying the word diversification can be a little, it could be a big word that can scare people off, but I think diversification is the most important word in investing. And what that means is just making sure you don't have all your eggs in one basket. Where there are a lot of people, when they start investing, they say, hey, like, I want to invest into these tech firms, that you want to invest into Apple, Microsoft, Tesla, whoever the big name firm is or are right now. The right way is to say, okay, well, I'm going to own all of them, but I'm not only going to own tech firms, I'm going to own real estate firms, I'm going to own smaller firms that are growing. I'm going to own firms that are in the UK. I'm going to own firms in Asia, right? So they want to, when you invest, you want to be diversified not only in the United States, but also internationally, emerging markets, developed markets. And then that way, when your portfolio is growing, you can participate in the continual growth of the market, the world market, instead of just within this tech bubble that we might be seeing, which unfortunately has bursted and will probably continue to burst over the next couple of years, but we'll see. And that's really where I step in, is to say, okay, well, here's what you learn. I want you to unlearn that. I want you to learn this, and let's try to find a way to diversify it through strategies like ETFs and mutual funds, which have been
Hmm.
proven to provide long term wealth.
Yep.
Might be slow. It might not be that 50% pop off that that influencer online told you, but over time you can know that you're likely going to get 10% per year on average with an S&P 500 fund versus feeling that you could get 50% over a course of a day. So it's
Yeah.
that, and diversification is also really important for risk management because though you could go and get 50% off of that one stock, it could also drop 50%. So we talk a lot about that as well.
Yeah. And let's take a glossary break for a second.
Mhm.
ETF, exchange traded funds,
Yep.
mutual funds. What is the core difference between those two and what are they in layman's terms?
Definitely. So I'll start with a story, right? So
Okay.
first we had mutual funds. Mutual funds were created because, and I'm going to oversimplify this, but a bunch of rich people came together and said, like, hey, I have all these different stocks. And when one or two of the stocks don't do all too well, I lose a big portion of my portfolio. Wouldn't it be nice if we had 500 of them all together and I can buy them with a couple clicks of a button? And I don't have to worry as much about the individual volatility of the different stocks. That's when mutual funds were born. A mutual fund is basically a collection, or like the cool kids call it, like a bucket of different stocks, 500 to 1,000 of different stocks all put together, where you're not only investing in one company, you're investing in a multiple. An ETFs came around when people said, frankly, they started nitpicking at mutual funds and said, I want an investment that acts like a mutual fund, but I want it to be more tax efficient. I want to be able to buy in and out anytime throughout the day, because with mutual funds, you have to wait until 4 p.m. Eastern in order to get pricing, in order to like formally buy in. And they wanted to be cheaper with lower minimums. And
Mm.
a guy by the name of Nate Most came around and said, hey, like I can create that. And instead of calling it Mutual Fund 2.0, he instead called it ETFs.
Exchange traded funds. It's the convenience of stock trading with the investment strategy of a mutual fund,
Yes,
basically.
exactly. Where you get the diversification that you want, but it's much cheaper and a little bit more efficient from a tax standpoint because rich people don't like paying taxes.
Exactly. No one does, but especially rich people because it's a lot of money.
Yeah, exactly. So that's where ETFs came around, exchange traded funds, and ETFs were created back in the 90s, but they really didn't pop off until after the financial crisis. So,
Yeah.
financial crisis people wanted, faster, more efficient vehicles, not only in life but also with their investments, and that's really when ETFs started taking off. And luckily, in maybe 4 years later, I joined Vanguard, and Vanguard was really promoting their ETF, so I was able to see like underneath the hood with the ETF
Hmm.
world, and that, I mean, ETFs have truly blown up since then.
Yeah, and I'll add to that and say ETFs usually have a flavor to them or a theme. So ETFs will typically they'll mimic a segment of the market or the market overall. So like they'll mimic the S&P 500. So a great simple index fund, if you've never invested before, you want to look into like an S&P 500 index fund because the likelihood of you outperforming the S&P is pretty slim.
Yeah,
So you're pretty much not going to be smarter than the market, especially if you're brand new. So I say trust the market until they prove they don't deserve your trust anymore, and then run with it.
yeah. My motto is there are two different investors out there. You have the investors that believe that they can beat the market.
Hmm.
I'll call that investor number one. And then you have investor number two, who used to be investor number one, then realized that ETFs and mutual funds were the way to go. And like,
Yeah.
trust me, I grew up at a firm where they preach mutual funds and ETFs. Mutual funds started there. Like, trust me, like I understand mutual funds. And even I said, I'm smarter than the market. I can outperform the market. And when I tell you, when I tried to do stock trading for the small amount of time that I did, I lost a lot of money. And then,
And time. And time. It's a lot of time invested to keep up with the news and let them do it for you. Let that portfolio manager do all the work and
yeah,
just all you have to do is buy into their expertise. I love that.
exactly. And you could pay, less than, what they call 10 basis points, but,
Yep.
0.10% for them to do it for you. But the challenge is a lot of people believe that they could beat the market. They believe that that is too easy, that they like, what? I don't have to do anything. What Chloe would say, like in lazy investing, like I can just build this portfolio and it can just grow over time and I just control what I can. That's too easy.
Hmm.
There's no way that that works. And it has been proven by many of the millionaires that, became millionaires through 401ks, IRAs. That is a proven strategy. And the less you touch your investments, the better they probably will be in the long run.
Yeah. And there are even, I'm going to introduce this concept for anyone who's listening. I'm going to just pull the curtain back and tell you I invest in these and they're called target funds and I love them
Hmm.
because my retirement fund is a lot in target funds. What these are they are mutual funds slash, they're basically mutual funds
Hmm.
you buy into and they change, they evolve. And the target fund has a date on it. And that date could be the date you retire. That could be, I even have a mix of them going. I know that the target date funds that are close to us in time. If it's 2023 right now, there's a 2025 target fund that's mostly in bonds and low risk investments. And then there's going to be a target 2065
Hmm.
that it has a ton of equity investments. And that target fund over time will shift its investment approach from riskier to conservative or aggressive to conservative.
Hmm.
And you don't have to do a damn thing. You
Yeah.
don't have to change your portfolio mix. You don't have to go and monitor it. You don't even have to hire a wealth manager. You can very simply invest in these types of things and have them manage it for you. And yes, it's as Chloe puts it, like lazy investing. I look at it as like, I don't want to invest my time and my money.
Hmm.
So my time is worth handing it over to the experts. And I'm willing to invest in, I love your take on this, invest in what you know or what you understand. That is a big mistake I see right now is invest in what you understand. And the first step is understanding it or investing the time to understand it, right?
Totally agree. Yeah, totally agree. My one of my mottos is that if I wouldn't recommend the investment to my 80-year-old grandmother, I'm not going to invest into it. Like if I can't
Hmm.
explain it to a 10-year-old, I'm not going to invest in it. And that has
Yeah.
saved me a lot of money. Especially, I mean, we can go on this tangent, but like, especially in the crypto world, I till today
Hmm.
don't really truly understand it. To be completely transparent, like I do allocate some to it just to be like, okay, like let me see like what's going on there, but it's less than 3%. Just to be like, okay, like let me dabble and see if that's like it's an opportunity. Maybe it'll be an asset class into the future. Who knows? But I don't truly understand it. So I didn't put much money into it, though there's so many people saying, oh, like put all your money into crypto, you make millions over the course of a couple, whatever. Like, and I said, no, I don't get it. And the reason why you want to understand it, not only because you are putting your money into it, you want to understand how it works because if something were to happen to it, you can explain why it happened, right? If I'm investing into tech firms, which I know how tech firms roll, like they tend to have really high valuations, and because the valuations tend to drive the price up, I know that if it's overvalued, then the stock price could be overvalued as well. So when tech firms didn't do so well over the last year, I can probably say, hey, like, valuations were extremely high. And because of that, the stock price was really high. So when you start unraveling that, and you start incorporating the fact that interest rates are much higher now, which sometimes can lead to corporate profits not looking as great, is going to directly impact tech firms. But like I
Hmm.
understand how that stuff works. So like when the tech firms started not doing so well, I knew what happened, and I still have conviction behind a lot of the companies that I invested into, and I continue to put money in there because I know over the long term they're going to be fine.
Right. And I think when we understand what drives the behavior, because this is not random, a lot of people look at this like a magic eight ball and they go, I put money in and I see if I make money and it's like up to the gods and
Yeah,
all these other things. And I go, it's a market and there's a science to it. And you know this from economics, and I know this from studying finance. There is a science to it. But when you understand a little bit about that science, at least enough about what drives the behavior or what affects the stock price, you are less likely to be stressed out and emotionally connected to the outcomes because you're like, well, that makes total sense because this happened yesterday in the news. Like that makes a ton. You're rationalizing now this like volatility and behavior because you see this all the time, I'm sure. These emotional reactions to the market, the, oh my God, the market tanked today. And I'm like, okay, like it does that so every so often. It should never drive major financial decisions when you're in an extreme emotional state.
totally agree.
And that's a big thing is you have to understand how the market operates and that that's going to happen. And I advocate for this too, where I go, if I'm invested, I go, it's in my positions, it's in my strategy, and I just have to set it and let it go. And if I'm in a long term growth mode, then I'm like, then I'm in a long term growth monitoring. and that's it.
Right.
If the market starts to tank, I go, all right, cool. Let's sit it out and wait out through until it hits another cycle, if you will. It's going to happen. I think that people just get too connected emotionally to the outcome there.
Totally agree. Yeah, I there was a survey that went out to other clients of advisors, and
Hmm.
survey was about why did you hire a financial advisor? Just a
Hmm.
pretty straightforward question. And a lot of times we think that, hey, like we are here purely because they want us to help them invest. And the responses that came back were, we are investing with you, or we're putting money into you because we, number one, we trust you. And number two, you keep our emotions in check. Like the amount of money that I believe and I can confirm that I saved people in 2020 when the market was taking a complete bloodbath because of COVID. A lot of where I earned the money that I made was helping them to understand what was happening, and also
Hmm.
telling them, hey, like, here's what's happening this year. Here's where your goal is, and here's what the market looks like from 1970 until now. Like,
Hmm.
zoom out, look at this. And once they looked at that and they say, okay, well, we know that it's going to appreciate about 10% per year on average, from 1970 until now, and this is just a blip on the screen, then they say, okay, well, I'm a little bit more comfortable now. Notice none of that has to do with math. Like, it has nothing to do with math. It comes down to just having the context and understanding that you're going to be okay. And a lot of my clients, they held on. And at the end of 2020, what we're up 18 to 20% in the market. If you disappear from the planet in 2019 and you came back at the end of 2020, besides all the craziness that happened with COVID, you probably would say, oh, that was a pretty good year, right? You would have had no clue that everything happened that what happened in March and April, where the market took, I mean, you could look at the charts. It was not fun. It was not
Yeah.
fun being on the financial advisor side either. But it really comes down to keeping your emotions in check, controlling what you can, right? You can control your emotions. You can control how much you contribute, how often you contribute. The things that you can't control the market. You cannot. My analogy is that you can't control LA traffic. You cannot control a lot of different things. But anytime you try to control it, you're not going to do anything but make yourself more and more upset. So control what you
Yeah.
can, and try to find a way to go through that volatility and just think the long term.
100%. I totally agree with that. Mark, how can people who are listening find out more about working with you, what you have to offer? They're resonating with this message and they're like, I want Mark to help me get the hell out of debt. I want him to help me save up for my wealth, my growth in the future. Tell us how you can help them with that.
Yeah, the easiest way is to connect with me on Instagram. So BetterWallet on Instagram. Send me a DM. I answer all my DMs. I don't have a VA doing that, and that's like my secret sauce, is because I love just talking to people in general. Send me a DM on Instagram. Other ways that you can connect with me, betterwallet.com is a way that you could reach out. I'm on TikTok, I am on Twitter, and I am on Pinterest. So those are my other channels. You can reach out there as well. And also, if you are looking to, truly get your finances together or bulletproof your finances, I do have a financial checklist that's completely for free. And we are talking about it before the show, but the goal of that checklist is to truly get your finances in order. But I want you to think about it this way. When you first started your job and you made your first paycheck, no one told you what to do with it. This checklist will teach you what to do with your money. And it's a 21-step process that you can go through in order to truly get your finances in order and start 2023 off the right way.
Love it. Make sure you download a copy of that checklist. The link is in the show notes. Mark, thank you so much for jumping on today. It was such a fun conversation with you.
Not a problem at all. Thanks for having me on.
Do you want to explore more about the topics discussed in today's episode? Or maybe you have specific questions on how to apply what you learned? If so, check out the Keep What You Earn community. Join other listeners, entrepreneurs, and experts, and get the support you need to get out of overwhelm and into action. Click on the link in the show notes to join now for free and start maximizing the value you get from each and every episode. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.